Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. We've talked a lot about exchange-traded funds with local investors piling into ETFs in recent years, but I wanted to look at the bigger picture beyond Australia to see where the opportunities are in the global market. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Avantis Investors has $30 billion in assets under management and is one of the top 5 active ETF issuers globally. Eduardo Repetto is the Chief Investment Officer at Avantis Investors and joins me this morning from Singapore. Eduardo, welcome to Fear and Greed.
Thank you for having me, Sean.
So I think we all know about ETFs and what an exchange-traded fund is. Give me your definition of an active exchange-traded fund.
Yeah, so as you say, exchange-traded funds have been around for a while. The first exchange-traded fund in the US started in 1993. So by this time, we know what they are. It's just a commingled vehicle, so an investment solution that is owned by many people, like a mutual fund, but different from a mutual fund is that it's trading in the market. You don't buy by sending money to a fund company. You just buy securities like you would buy Apple shares or any Microsoft or any other company.
Yeah.
The difference between an active ETF and the traditional ETF, that's how we started, is that the original ETF were index funds. So you have indices like the S&P 500, the Russell 1000, the MSCI World, the Australian ASX 200, 50, 100. So those are index funds. So there is no portfolio management decision but to replicate the index. So the index decides that it's going to hold securities for a whole year, no matter what's the price, no matter what's the fundamentals. And those ETFs that are index ETF just hold the security for a year, no matter what's the price, no matter what's the fundamentals. And that's a big deal. Remember GameStop. GameStop is security that went from nothing to 23 billion and it was part of a small cap indices. And since the index was not changing securities until the next June, in the case of Russell, they kept the security going up to 23 billion and down. That's an index ETF. Active ETFs are basically ETF where the portfolio manager has discretion to buy and sell securities at any point in time, like an active mutual fund. And they don't have to just track an index with zero tracking error and replicate their holdings. They can make investment decisions based on today's information.
Okay. So what about the current landscape for ETFs? Are they growing in popularity? And if so, why?
Well, ETFs are growing in popularity. It's dramatic. It's worldwide. And I noticed that even in Australia, that I don't know enough, so I don't want to tell you too much. But the Australia ETF, I know that it crossed 150 billion a couple of months ago. So it's growing. And in the United States, I give you an idea. Let's compare ETF with mutual funds. Over the last 3 years, 2021, 2022, 2023, year to date, 2023, if you look at ETF, the total inflows in ETF is close to $2 trillion. If you look at mutual funds, they don't have inflows, they have outflows.
Yeah.
And the total outflow is like $1.7 trillion. So ETF won like $2 trillion, mutual fund lost close to $2 trillion. That's telling you, looking at flows, looking at people's decision, who is winning and who is losing. ETF are winning. And the way I think about this is mutual funds is a very old vehicle. It has a lot of benefits related to holding individual securities because you can diversify, you can invest globally. But it's old technology. ETF is new technology that provides benefits that mutual funds cannot provide. And it's the same as payphones. Remember payphones? Where you put a coin and then someone says, instead of putting a coin, you can have a calling card or you can call with your credit card. You remember them? They don't exist anymore.
Yep.
Why? Because now we have cellular phones, iPhones, Samsung phones, all different kind of phones that provide a better solution, a better service. And the same happened with ETF.
Okay, so what are the solutions that the ETF has provided that the mutual funds aren't providing anymore? What are the 2 or 3 things that people value?
Well, it depends a little bit on what country you are. For example, in the United States or if you go to Europe, they provide tax advantages or offshore money provides tax advantages that you cannot get in mutual funds. But it's beyond that. So if you go back in time, institutional investors didn't like mutual funds because the performance is affected by people coming in and out. Everyone pays the cost. Everyone is exposed to inflows and outflows and the costs and everything associated with investing money or to money that is being redeemed. ETF provide protections for that. ETF really isolates people coming in and out relative with long-term investors. Long-term investors don't get affected by people coming in and out, so they don't have to bear the cost of those people coming in and out. And so that level of protection on top of the tax benefit is something that people appreciate.
Stay with me, Eduardo. We'll be back in a minute. My guest this morning is Eduardo Repetto, Chief Investment Officer at Avantis Investors. What about the liquidity? Is there a liquidity benefit in ETFs?
Absolutely, that's part of the benefits. So if you can think about liquidity in two different ways. The first one is you can trade whenever you want, and some people care about that. But in general, long-term investors are happy, even trading once a day. That's not a big deal. But if you think about liquidity, imagine that you have a mutual fund, and someone makes a very, very large redemption. Suddenly, the portfolio manager has to sell a lot of securities to satisfy that redemption. And who pays for that? The long-term shareholders, not the person that left because it's already out. If you think about an ETF, the person that pays is the person that leaves, and the long-term shareholders don't have to bear those costs. So they're really better protected. And so liquidity from the point of view of trading coming in and out whenever you want is a real benefit, but also the benefit is that whoever comes in and out bear the cost, not the rest of the shareholders.
So in terms of active ETFs, and we know why people we know what they are, we know why people are using them. What are the sorts of active ETFs that are particularly popular at the moment? Is it around ESG, environmental, social, and governance? Is it around other artificial intelligence, I suppose, is another example? Where's the popularity at the moment?
Oh, that's a great question. So if you go on ESG funds, and we manage a ESG ETF, we call it responsible strategies. Last year to date, flows in ESG strategies, at least in the United States, I really cannot speak in Australia. The flows have been very, very weak. Last year, the same. But the year before have been strong. A lot of that is because of performance, how ESG funds have underperformed the last couple of years and were doing better before. There are people that really want to invest with ESG solutions, and that's why we have solutions for them. But in the United States, not everyone wants that. Different countries act different. That's a different clientele. So if you think of where most of the flows have been going in our own ETF, we have very good inflows in emerging markets. We have very good inflows in small caps. We have some of the best small cap ETF that I find. Very good inflows in large values and small value securities. So we have been growing very, very nicely. We started 4.5 years ago, and today we have close to 35 billion, a little bit shy of that, American dollars, and good flows. The way I think that people are using us is they are trying to create an asset allocation, a well-diversified portfolio, but instead of being a portfolio of index ETF that really don't add much value, try to have ETF that can add value. And that's the role that we play.
Okay, so we've talked about the US. What about outside? So the inflows in the US are huge, and clearly investors like that, and maybe they're investing in emerging markets from the US. But what about investors outside the US? You've been in Singapore, South Korea recently, Los Angeles based. But what about other investors from outside the US? What do they like? Is it the same story?
Yeah, look, it's a little bit different in every country. So in certain countries, you have people liking more thematic ETFs. If you have other countries, people think differently in different countries. But, different companies provide different benefits. We try to provide investors with building blocks so they can create good asset allocations more than thematic investments for market timing. But if you are speaking about outside the United States, for example, in Europe, if you look at ETF in Europe, last year's ETF have more inflows than mutual funds in Europe. And year to date, if you look at the flows in Europe, mutual funds have $78 billion in outflows, while ETF have $100 billion in inflows. Yeah, the US numbers are bigger, but the trend is there. Mutual funds facing outflows, ETF facing inflows, similar to what you see in the United States.
Eduardo, thank you for talking to Fear and Greed.
It's a pleasure.
That was Eduardo Repetto, Chief Investment Officer at Avantis Investors. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.